News. First, with breaking news.
All right, thank you for staying with us. Well, Nigeria is endowed with abundant natural gas resources, which in energy terms is in excess of the nation's proven crude oil reserves. The current reserved estimate of Nigeria's gas is about 206 trillion cubic feet, and the government is still planning to grow the reserves to about 600 trillion cubic feet. The 600 trillion cubic feet is expected to achieve the desired development required for a gas nation. On the domestic front, Nigeria currently supplies gas for power generation, either as source of fuel or as feedstocks to cement and fertilizer plants, glass, food and beverages, manufacturing industries, and so on. More local industries are now aware of the advantages and benefits of using gas, with the campaigns behind the use of liquefied petroleum gas, which have in turn increased the demand for gas in the country. Well, I introduced him earlier. He's joining me via Zoom. He's a partner, oil and gas at Anderson, Nigeria, Mr. Chiwendu Enechi. Good afternoon, Mr. Enechi.
Good afternoon, Tolu, and thanks for having me.
Yeah, it's good to see you this Friday. Let's start the discussion with Nigeria's gas master plan, looking at our current reserve base and production volume. Proven gas, and even we have unproven. So let's leave the figures out of it. You are the expert. You might know the real figures that we should work with. But how feasible is this based on the current infrastructure that we have?
Well, thanks for that question, Tolu. Our proven reserve is about 200 trillion cubic feet. Obviously, poor gas infrastructure is one of the many issues that have impeded the growth of gas development and utilization in the country. So for us to achieve the objective of actually, maximizing that potential that we have, which is part of the objective of the gas master plan, key investment must be geared towards, developing LNG, which is liquefied natural gas infrastructure, to encourage the adoption by local industry, which you rightly mentioned. But of course, it's not news that our existing infrastructure won't get us there. So, however, it's not all doomed. Efforts are actually being made by the government to address some of these infrastructural challenges. With the recent Ajaokuta, Kaduna-Kano pipeline, which is currently under construction. So, with the new pipeline being constructed, there are hopes that power producers, for instance, will increasingly deploy LPG as feedstock, which you mentioned during your introduction. And of course, that will help us improve the low effective demand that we currently have in the power sector, as some of the challenges around stranded gas, for instance, could be addressed. So the hope is that more of such investments will be made to improve the gas infrastructure. Just like you mentioned, look, infrastructure is a big issue in the industry. Is one of the issues that even the guys in the power sector speak about as LPG being a feedstock. So it will go a long way if we have more investment in that space going into the infrastructure space, because obviously what we currently have will not take us to the promised land.
Let's now look at government's efforts again, National Gas Expansion Program. I remember the Minister of State for Petroleum Resources coming out to say we are more of a gas nation, that we should be a gas nation instead of even a crude oil nation, but we've not really taken charge of this. Now, do you think all of these programs is enough to unlock the potential of our gas reserves and the timeline to transform this into economic viability? That's the most important.
Well, thanks again for that question. Obviously, I'm sure you're aware of the 250 billion naira intervention fund by the CBN, for instance, which for me is a welcome development, as that will enable more local players to participate in the gas sector. However, that is not enough to unlock the potential of our gas reserve, because we are just making the funds available. There are other key issues that have impeded the gas development, just like I mentioned at the beginning, and utilization in the country that also need to be addressed. When you look at it over the years, four major issues, I must say, have impeded the growth of gas development and utilization in the country. One of which is we have a highly regulated price environment. You also have the issue of low effective demand, especially in the power sector, one of which the reason being the infrastructure challenge. And then, of course, you have um, poor gas infrastructure, which affects the effective demand. And then the last one, which I like to call the weak fiscal incentives. However, my understanding is that a key objective of the Petroleum Industry Act is to accelerate investment in the gas sector, which should then create additional revenue line for the government, and also new job opportunities for the citizens. And the PIA attempts to solve the issue of weak fiscal with some incentives that it's provided for, for gas players. However, every investor will look beyond the availability of funds like the 250 billion intervention fund and fiscal incentives. So those other issues that I've just mentioned that have plagued the sector will still need to be addressed for us to, to enable us to unlock that potential. So all those issues we need to be taken together, and hopefully over time, in addressing the issues one after the other, we'll most likely get to where we want to see us, play out.
Interesting stuff. Let's now talk about the Petroleum Industry Act. There's no how we're going to talk about this and not touch on that act, because a lot of talks a lot of talks about that act and how it will open up the space, particularly the gas space, which everybody has been talking about. Do you think there's enough provision for gas development in this act, and what more can be done, leaving aside the extension for 18 months? Well, maybe that has to do with the subsidy issues, but what do you think about all of these delays and how it affects the gas space in the sector?
Well, thank you so much. And staying away from the delay, first of all, let's even speak about the PIA. And like I said, I did mention that part of the objective is to see how we can create more opportunity within the gas space and encourage investors to go there. But in my own view, prospective investors will typically, evaluate the attractiveness of our fiscal incentives along four parameters. One is the competitiveness of the fiscal terms. Two is the stability of those terms, and then contract sanctity, and then, of course, license rights. I've mentioned the issues that we've had over the years that have affected the growth of gas development and utilization. But I must say that we've made significant progress over the years as well in addressing some of these issues. Beyond the prior to PIA, first is the improvement of the gas price framework via the Gas Master Plan Price Deregulation Roadmap. And they also have the fiscal via the midstream gas incentives and the associated gas framework arrangement for upstream players. However, we've made some slower progress on gas infrastructure, which I already mentioned, that affect the power sector. So looking at these issues and the current Petroleum Industry Act, some industry players have said that some of the provisions with respect to gas have the potential to derail some of the gains we've made in pricing framework, as well as the fiscal terms. Although the PIA seeks to address the issue with effective demand through proposed enforcement of domestic gas supply obligation. On pricing arrangement, for instance, the provision of the PIA on continued gas price regulation to some people may delay the transition to a willing buyer, willing seller gas market. Obviously, market determining pricing and free competition is the most efficient way, to allocate our gas resources. So investors will be looking at that to say, look, regardless of what we have regardless of the incentives, do we have a market that encourages free competition? So we've seen the positive impact of deregulated pricing in the telecom sector, for instance. So that's the kind of impact you want to see in a deregulated gas price environment where investors are able to come in, knowing fully well that they can, charge the kind of prices that will, one, recover their costs, and two, provide some return. Don't forget that gas investments are indexed in USD, and the regulatory prices are priced at, our local currency. So with the exchange issues and all that, so investors will be looking at all that to say, okay, what kind of pricing environment do we have outside the incentive that we have in the PIA? Now, with respect to gas fiscal incentive, obviously the PIA has essentially removed the what we call Associated Gas Framework Arrangement provision that permits upstream players to either consolidate upstream and midstream investment in a single vehicle or create separate vehicle for this investment. Of course, what that AGFA, as we like to call it, does for you is that it allows companies to offset some of their gas costs against their crude revenue. Obviously, this gives a quicker recovery of costs, given that the existing tax rate for crude is higher than that of gas. So the removal of that AGFA obviously will affect the economics of existing and future gas investment. So this will also, of course, it will also create that administrative burden associated with running multiple entities. But I like to also say that even with those issues, it's important to mention that the PIA has some very, really interesting incentive for gas utilization players. We have tax holidays, and also for the guys who want to go into investment in gas pipeline, we also have tax holidays as well. So there are some incentives that the PIA has that I think are also really sweeteners that investors would then evaluate along other issues that I've mentioned, which obviously needs to create an investor-friendly environment for those people to come in. As part of effort to improve gas utilization, the PIA also requires NNPC to then promote domestic use of natural gas through development and operation of large-scale gas utilization industries. So what that means is that NNPC is required to make investment in gas utilization. And we hope that this will in some way encourage others to do so, obviously with the right environment, of course, to encourage more investment in that space.
Great stuff. Now, we've seen sharp spike. Yes, these were comments that came in immediately. Guys saw that you were coming on the show, viewers and all of that. They said, yes, the spike in the price of LPG, though government is trying to look into that. But first, let me ask, what's your reaction to that? And if we continue to import more than 70% of gas products, especially LPG, without domestication, do you think bringing down this price to what will make it accessible to all, do you think it won't be a mirage?
Absolutely. I mean, the only way out of this issue, just like so many other things that we import in Nigeria, is domestication. You know, if you look at the current information from DPR, which is now called the Nigerian Upstream Regulatory Commission, we currently export about 41% of the gas we produce. 31% of that is used in oil field for maybe gas reinjection and all that, while 18% is utilized in domestic markets, particularly for power, and then 10% is flared. You know, so reason for this low percentage available to domestic markets is not unrelated to the issue I mentioned about gas pricing. So for us, it's important to note that, just like I mentioned, the investors are going to be looking at their costs. You've got investment index in US dollar, while the regulated price, domestic price is in naira. You know, so you then need to ask yourself, what is the incentive for me to focus on the domestic market? So, of course, this is one of the reasons it's been difficult for upstream operators to adhere to the domestic gas supply obligation. The pricing environment just doesn't support domestication for investors. You know, however, the PIA provides for enforcement of the domestic gas obligation, you know, through the NNPC. Hopefully, if this is implemented properly, we can see more domestication in the sector, where players are then, you know, adhering to the domestic gas supply obligations. We can then have more gas supply within the Nigerian market, which obviously will help reduce the spike that we've experienced in LPG locally.
The Nigerian government has also pledged to end the burning of gas as byproduct of oil by 2030. Well, that's under its latest climate change plan submitted to the United Nations. Do you think this is feasible?
Well, it's an interesting question. Obviously, steps towards energy transition has grown in leaps globally. You know, since the establishment of the United Nations Framework Convention on Climate Change. It is on the backdrop of that that Nigerian government signed the Climate Change Act into law last year. And of course, the Act provides that legal framework, for us to achieve low greenhouse gases emission, as well as promoting sustainable economic growth. So the Act establishes the National Council on Climate Change, which is empowered to then make policies on all matters relating to climate change in Nigeria. So this is a good step towards the transition to clean energy, and obviously, I see how that can then help us to reduce the burning of gases. However, it's important to mention also that the PIA, has strong provisions against gas flaring with steeper penalties. And of course, companies engaged in that will no longer be able to take tax deductions on the gas flare fee like we currently have. And then the PI also requires the NMPC, for instance, to make investment in renewable energy. And so that is statutory requirement, which obviously will then help the government towards the achievement of the objective of the climate change. But again, I think what is paramount is increasing investment that we have in the gas space to see how we can then change our reliance on fuel. So I do believe that beyond the enactment of this law, like the climate change, the provisions that you have in the PIA, it will also take the political will on the part of the government to implement various policies that we already have in the country. One of such policies is the auto gas program, which was launched under the National Gas Expansion Program in December 2020, for instance. So the program is aimed at, transiting Nigerians from the use of petrol to compressed natural gas for automobiles as a way of deepening the penetration and utilization of gas in various forms. Obviously, what that does is it increases demand in the market for gas, and with the right infrastructure and every other thing, we'll have more gas in the industry, and investors can then, look into making investments into that space, knowing fully well that there could be some recovery to be made, if they invest the amount of gas that they will ordinarily flare. But again, that program that I just mentioned was expected to convert about 1 million cars by the end of last year. I'm not aware that this was achieved. I don't know how far that program has gone. So you have a number of these policies that we're just hoping that if government can then just key into it and implement properly, it might help. On use of CNG, for instance, I know that some IOCs have already indicated plans to build CNG stations in Abuja and Lagos, as an example, which I expected to become operational in the first quarter of this year. Also, you have a company like NIPCO, for instance, which is a Nigerian energy company, is currently constructing a pipeline that will run through Ibadan, Shagamu, and Ibadan to provide CNG services to industries in that region. So you have other companies who are in talks with government to provide auto gas filling stations where CNG powered vehicles can then be refueled. So I do believe that such investment by these companies should be encouraged. Obviously, they come with its own costs. For instance, if you are going to convert from petrol to CNG, it comes with its own cost. However, despite the high cost of that conversion, each utilization can help us, leverage our gas reserves, and doing that obviously will have impact on the amount of gas that we flare. That will also reduce and cut down the excessive reliance on fuel. But again, the high cost of conversion kits is due to the fact that they are imported. So if the government can work out some favorable terms and conditions, like maybe free import duties and tax incentives to the guys who will play in that space, for instance, the cost per kit could fall and more cars will then key into it. So such initiatives will go a long way, to increase effective demand for gas locally, which would then encourage more investment in gas utilization and reduce flaring. So obviously this will be in addition to addressing some of the other issues that I mentioned, like infrastructure and all that have been affecting the industry all this while. So taking all that together, if you put everything together and implement the policies that we currently have, beyond just the letters of the law and other documents, I think we'll go a long way to, reducing the gas flaring.
Brilliant submission there. I must thank you so much, Mr. Chinwendu Enechi there, for joining us on the show. He's a partner, oil and gas at Anderson, Nigeria. Thank you so much for making sense of this topic. I really do appreciate your time. Do enjoy your weekend.
Thank you so much, Tolu, for having me. Enjoy your weekend as well.
All right then.